Brenda, I'd like to get your take. Again, S&P below 4,000. You have serious questions on which side of this debate we should be on, as it truly is, it feels like, a battle. You either believe the Fed is going to do what it says, or you think they're going to have to pivot at some point, and thus you can find some reason to be more bullish than most. Which side are you on?
Yeah, I agree with Joe's earlier comments in that we still need more data. But I think with some of this ancillary data that we're getting a picture of a strong economy, right? But we're also getting data suggesting that inflation is continuing to come down, with home prices coming down finally. A lot of food-related commodity prices have come down, hearing more and more stories about various industries being over-inventoried, which is good for the inflation story. So I think we're likely to see inflation continuing to come down. But we are of the view that if we look out over the next 6 to 9 months, we think we're close to the end of this rate hiking cycle. But it certainly depends on a lot of things. No doubt the Fed's going to raise rates late in September, and then likely 2 more times this year. But they will have at that point done a lot, and we will be in restrictive territory. So I think there's a chance they're likely to pause and wait and see how their actions are impacting the global economy if we don't have a clear picture by the end of the year, which we might have. But I think as we look at in terms of what do we do right now, I think if we look at what we're expecting for global growth and growth within the U.S., we're likely to see a slow growth scenario playing out. So if we look at what's worked over the last couple of years, it's been a lot of cyclical sectors. And I think those groups are just going to have a much harder time in that sort of economic environment.
Okay.
So I think we're likely to see a return back to high quality growth companies.